Welcome Arnoud, Raoul and Dylan. Good new week already. Kijos, welcome as well. And Wes de Vries, also good to see the same faces again. I was just expecting a little bit of the order flow, because we had, of course, the move at this time, the chart and the news with Trump and Iran. It's just a shit show, in my opinion. Like, this move was over-exaggerated, and now they have peace talks. I believe they just play a game to extract the money from the markets using their failed negotiations in the weekend to dump prices, and then early in the week they get positive news. But at this moment, yeah, it's just becoming a bit too obvious, so we can just trade with them. I think we can squeeze higher, and I'm not even ruling out new highs. But let's just watch. Also, what is the fib retracements? Yeah, around here. Okay, so let's first check the welcome Pluwer as well and Lise. Good to see you all. A lot of familiar faces, and hope everyone has a good start of the week. It's Monday, so yeah, usually on Monday I'm a bit less, or at least I start a little bit later. And also with the market, not really interested trading London overall, but especially not on a Monday morning. So often the real trading starts for me during like the end of the New York or London session, and then from now till Friday. But today we had some nice local action. So let's first get into, let's zoom out a bit to see what happened this weekend. Because last week we ended the stream where we were around here. Let's see. And we had that kind of failed distribution over and over again. So a lot of times you can watch for distributions, but also like failed distributions can also happen. Because here we basically had like sweep one. Welcome, by the way, also Slatan and Rice Baby. Good day and good week. But here we basically had like sweep one, sweep two, sweep three, sweep four, and over the weekend, sweep five. So this is basically a five tapper. So in these cases, it's very important to also recognize that not every sweep is shortable. Otherwise, you're shorting, you take like multiple losses till you finally get your move down here, but likely not even get a good trigger. So failed, also something important, failed distributions are actually bullish and failed accumulations are bearish. Because if the purpose of the market maker here is to push price down, and they fail to push price down over and over again, that shows that there's a lot of demand on the other side as well. So over weekend, we had this move, and then like Friday and then Saturday over day. Normally on Saturday it's super quiet, but right now we had the push up into those single prints and into that range high supply where we broke down from a few weeks ago. And there a lot of shorts got or longs got wrecked, and the move was pretty violent, but it was hard to get an entry. For me, especially since on Saturday I just don't watch the charts. But we can watch, was there a good entry? You kinda see like a kind of like a topping pattern. So local 1, 2, 3, local model 2. And if you really zoom in, you probably get a structure break here. But like the more significant break was more here, where you first got a sketchy break, then another sketchy break, and then already the very aggressive move. So then getting in was hard. But basically, on the high time frame, if we also look, we had this structure from low up. So low, high, higher low, higher high, higher low, higher high. And then here you break structure super aggressively. So this is a bearish break. So technically the uptrend has been broken after tapping into the range high supply. So a super clean, actually a model 1, 1, 2, 3 into a model 2 breakdown. So according to that, this can go lower and basically much lower, but I don't know. We talked about it in Discord as well. I think it's too obvious that this this model 1 into model 2 plays out. I think too many people are bearish right here, while market is pretty strong. And I feel more people are gonna get wrecked if we actually make new highs. But that's just feeling. Technically, this goes lower, but sometimes you also have to trust your gut feeling, because that is also part of like the experience you have. So I'm really curious what happens here. And the funny thing, we have now tapped this range high supply. So if we are bearish, then this should be the high. Getting back above that, and I'm pretty sure we will go to like new highs at least. So this is super clean invalidation now for the peers. And we have that range high supply. Structure break lower. But if we still watch like locally, let's delete the volume to have a clearer picture. Like we even broke 4-hour back to bearish. If we look at this local uptrend, since we made it SFP of this low, we have low, high, higher low, higher high, higher low. Then here basically a high, higher low, high high, higher low, higher high. So even here we broke 4-hour structure. So it is pretty significant. But on which time frame did we not break? We also broke 6-hour because we have 2 candles going down here. Otherwise, this would have been the... And I'm kind of leaning towards this being our market structure low instead of this one. So I'm gonna look on which time frame is that the case. Then on the 8-hour, but on the 8-hour this is also valid. So then you'll still have your break. So 12-hour. Look, on 12-hour we have the level I'm more leaning to, where we have from the low up, basically low, high, 1, 2 candles going down, so valid pullback. Then the same here, higher high, 2 candles going down, higher low. Then, this is an inside candle, so that's also not valid. Yeah, okay. So basically what I want to share, I cannot validate it with the market structure rules, but what I feel like is that we gonna complete this move, and then maybe it's not on the 4-hour or 6-hour, but on a certain time frame you will find it. But that this is the higher low, this is the higher high, this is the higher low, and this is the higher high. I kind of feel like that this is still a very good possibility as well, where this was our former range low, range demand. And last week I was also watching for a tap into that level, but then we just front ran it, where basically this was our range, aggressive break above, mitigate, continue. However, last week we did not tap into this box, so this is still valid range demand. For now we did not tap into it, but price, it can take time for price to move up, take liquidity, take liquidity, take liquidity, come back, maybe mitigate here and then push higher and then continue that overall uptrend. So coming week should be super interesting, because we have for the bears a super clean invalidation in which they will say this is the range high retest. We broke structure back to bearish, so we go down. Best case is you get the pullback here and then lower high for low low. While the bulls also still have like a case that we are turning up, we're showing a lot of strength. There is a lot of war talk and stuff, but Bitcoin keeps showing a lot of strength. So what is the reason right now that we would nuke hard? The only reason I can think of right now is that Iran and US are going into an even heavier war, but they already bumped each other. They already had a ceasefire. They already had like all the playbooks, what could go wrong. Then, yeah, I feel like they just play a game to manipulate the market. So that's also the reason why I was looking for that Model 1 first, which would have been the cleanest, because then you have 1, 2, tap 3, take out your weekend low, your Sunday low, tap into that range demand, starting at this level, and then you have like super, super clean. However, market does not always do the most clean option. So instead of the Model 1, thanks Skijos for showcasing that, because I was looking at it and I was like, these are equal lows, but I already saw like a super clean liquidity trail, which goes to here, but we can extend it basically, since this is also only buy side liquidity. So right here, that's why I think we can extend at least into that liquidity level. But here on Bybit, we made equal lows, which means that this low and this low are the same. So this one did not sweep the liquidity below it. But then I was like, okay, let me check it further with the order flow. And this is on Binance, because Binance is by far the biggest, highest volume exchange, like by a lot. So what Binance does is more important than Bybit. And here you can see that you have like first sweep is here. Can I all okay, let me just draw it. So this is like the tap 1, and this was the tap 2. So we have 1, 2, and we know for a Model 1 we want to sweep this low. However, you can also, instead of sweeping the low, for Model 2 you can sweep your extreme liquidity, which is your first higher low after your tap 2. So here you have high, high low, higher high. So this low right here is your extreme liquidity. And on Bybit, on Binance, we did sweep it. So this is the tap 3. Then internally we had low, lower high, lower low. Here an SFP, so not valid. And then eventually the official break was here, validating the Model 2, which is hit the target right here. So that was super clean. That on Bybit, on Binance, we did get the trigger and we get the market structure confirmation for the Model 2. And what was nice to see was that we, at the lows, saw the nice delta. So we saw 50 million being sold in the first step. So this was absorption, price going up, coming back down again. And here you see also like 20 million sold in that week and 11 million sold in the week. Again, a lot of aggressive selling. So these are market sells. And if that happens at the low and price goes higher afterwards, that shows that someone is buying here, aka accumulating. And the same happened here with the third tap, which took liquidity and then also saw some absorption, which is like a nice representation of seeing an accumulation in real time. So normally we just look at the wick, like the chart itself, but right now with the order flow you can also nicely see like the first step gets established here because you have a lot of selling, but price failed to close lower, pushing higher. And then the same happened here, a lot of selling, but someone is absorbing. And that's then actually tap 1, tap 2, and then eventually tap 3 right here. So a super clean trade to start the week. And I've took out 60%, 65% at the, when I saw it live right here, just above the highs. And I'm looking to hold the rest either till my entry level, so the rest gets stopped out at break even, or looking to move at least towards the start of liquidity trail into the fair value gap, and then gradually take out something. So if we sweep here, maybe I take some more profits there, and then maybe I let the rest run, or just close out on weakness. And then can look for potential shorts in this area, because it's still valid to look for shorts. But yeah, as I said, I think it's a super crowded idea to look for the short idea here. So just taking that into account. If we look at the deviation threshold, because we know an accumulation can also flow over into a distribution. And for that, you can watch your deviation threshold, which is this. So for now, price wicked the deviation threshold. So if this goes down, this can still be like also like the tab 2. And then this could potentially even flow over into a model 1, for example, where we sweep all the liquidity, create a third tab, and then go down. And then maybe go to the POI I had at first. If instead of here price going down, but it closes above the current high, then technically it should have like an hourly close or 2-hour close above and not have the pullback right now. But if it closes above here, then technically we have this range, a breakout above our deviation threshold, in which you can even look for the RIMC. So that would be even a more bullish sign if it can break above here. Hold above here, then this range is range demand, and you can look for mitigation continuation. So that's what I'm locally looking at. And on the way down, we also created some fresh, or on the way up, some fresh demand. So that are like the local levels. Liquidity, the imbalance, and then this is the supply, which got created over the weekend. But basically, from here all the way till here is just a gap. So if price goes above it, it can very quickly fill it, because this is all basically free air until the supply there. So pretty interesting start of the week. And let me look at the questions and clear up this in the meantime. And see what's happening here on the low time frame. Oh, and one more thing. Like now I saw that we swapped it on Binance, so that still validated the Model 2, but also used here the USDT, where I shared that 1 to Model 2. And here we took extreme liquidity. So sometimes on Bitcoin or other assets, you have that little difference between Bybit and Binance, for example. But right here, you could see this was a valid sweep of your extreme liquidity on the USDT dominance chart. So then this was valid 1 to Model 2, which already gave also a internal break, as shared in the group, I hope, where we had low, high, higher low, higher high, higher low, higher high. And then this morning we had that internal break already here. But like the more important structure was this low. And that first got swept. So that's also why I said like the more important structure is an SFP for now, but internal already broke, which then validated the Model 2 distribution. So clean use of the confluence of this chart. And let's see, what is the current outlook? Yeah, that was also very nice. We had this local Model 2, which was also the sweep of your range high. So with tab 1, this was tab 2, and then you have an internal model creating the tab 2 of your bigger model. So that's also like a nice confluence. On the downside, we had like a failed accumulation, basically, where we had tab 1, tab 2, tab 3, and then kind of like a distribution or like deviation move. So I'm seeing this more like a field accumulation, but this is still the range I will look at. So basically this step 1, this step 2, then see this as the deviation, and then this now as the new range. With basically free air, this is just a big gap again, and then the demand starting here, where we had low, lower high, lower low, lower high, lower low, break back to bullish. So this whole zone is demand. So alert there, alert just above that high. And then we have pretty clean levels to work with, which first is this demand below. We can also see if we go down here, that this maybe turns into a model 2 or a model 1, this local range. And then we have supply above, which can be in confluence with the distribution. So super clean levels to work with. Let's look at what is happening here. Yeah, so spot held pretty well over the whole weekend, which also was a reason why I was more, or at least not as bearish as most of the timeline seems to be. And then on this push up, spot is actually selling some, so that's interesting. And yeah, not too interested based on that. Locally, I see here big sell. But now that spot is selling off, makes me, let's see. Well, let's just see what happens here. This is now the local range. And then I'll have a look at the chat right now. Good trade to start the week with the opening first many. Well, the order flow details added so much that really something later. Yeah, it can be, like I've said it many times before, because a lot of people think that using the order flow, that it's like a magic tool, because it can look like, as I just explained it, then it's like super, super useful. But it can also be very deceiving. So if you don't know exactly what to do, your mind can play tricks with you, coming up with all kinds of theories why you should take the long or should take the short. So be careful with it. But if you use it in combination with, for example, the validation of your tabs, so tab 1, a lot of delta, tab 2, a lot of delta, then it can be very useful. Or like the single prints, stuff like that, then it's super, super useful. But you should know when to apply it or when to look at it. Because when I started with trading, I also looked at this because I thought, oh, it's the magic. But then you start looking at it and you come up with just validating your own trade ideas. So it's very, very good also to for recency bias. So everything, if you are in a long, you will now see, okay, let's further long it because this and this and this. And if you are short, you will come up with the opposite because this and that. So it can be very, very useful, but also very deceiving. However, past weeks, we have seen those single prints, which I talked about a lot of times, getting filled over and over again. So last week we had the remaining on the downside. Then we filled them perfectly before getting that super aggressive move up. Then last week we also started with the bullish single prints below us, which got filled before moving up. And then we made like that last sweep higher. Oh no, first we also had the sweep higher on Wednesday, partially filling the single prints. But then I said, like, we did not fill every single print. So there's more remaining higher. So there's still a good chance for price to make new weekly highs, to fill them. And that's what eventually we got on Friday with that push. Then they all got filled. And if we look at what do we have right now, then on the lower side, everything is filled. On the upper side also, at least locally. And for now, for this week, we have some resting below. So that was another confluence for that local model 1. Because if that tapped into like here, then you filled the single prints as well. So 3 drive into that range demand starting here while filling the single prints would have been super, super clean. But it's still there, so we can still watch for that maybe later in the week. Because right now we have a lot of options. We also have this big gap with single prints above us. So maybe price wants to have the model 2, which already played out. But there's still a reason that we come back, backtest, and then fill the single prints. And then maybe distribute here, or we take the highs, and then come back to fill this, and then go up. Like up or down, sounds like that. But there are a lot of ways, like it are magnets. So sooner or later, price wants to likely fill this and that. So now the question is, how is price going to behave into it? But eventually, I feel like it will be more bullish if we are actually bullish to move deeper first a bit into that range demand below. So now depending on where we go first, if we first go here, then I'm definitely gonna look for short triggers. Then maybe everyone gets super, super bearish, but this is where I'm super interested in longs. And a scenario I might see playing out, which I just see what would be pretty clean. Let me show you that on fresh chart. I kind of see like a peer 3. Let's show you here. Where this is our range. And then we had the potential for the distributions right here. But this is a field distribution, or like a 5-tapper, which shows exhaustion, which is also something happening quite often in PO3s, where this is maybe the range. Let's say we just randomly, maybe we do this and then come down this. Then we have here our range demand with these single prints. So what if we get a bullish PO3 in this zone where everyone gets extremely bearish for us to get a bullish PO3 into new highs. And this is just a scenario I just saw pop in my mind. But this will be pretty fucking clean to me. Here, range demand, mitigate the range demand. So this will be, for me, be the cleanest scenario, how I would play it. Local model 2, fill the single prints, go down, make everyone super bearish, only for price to flow over into a bullish PO3 with like a local 3 drive here, send prices higher. But it's just a scenario we should just follow price as always. Oh. Yeah, if that plays out, oh yeah. But we will be prepared for it. Let's see. 50% of that massive weekly wick is sitting at 72. Let's see. Weekly. Yeah. Yeah, clean. So that wick fill will be Fib. Yeah, it's crazy. It's crazy how sometimes the liquidity and like also here, right? How you have that gap, this massive gap with these single prints, and then from here we start a liquidity trail basically. And you can see this all with pure the technical, but then if you combine that here again, like where does the single print start? It's literally just above where the liquidity trail also started. Sometimes it's truly fascinating. Okay, so price is showing strength, and right now it's pushing above the DL2. So that's also interesting. Like if it can hold above here and close, then this is instead of deviation, a potential rimsey. Okay, so I'm just gonna let BTC do its thing. I have an alert after this liquidity is taken into the single prints. Also alert right there. And then for shorts, I would be very careful. Here I would wait for at least the single prints to be cleared and then tapping into this supply. And then here the most optimal short level, because this is a pretty clean invalidation. So shorts definitely make sense. And if we get triggers, I should just execute the system and not change my mind because of my bias. But I will be a little bit more careful as normally because I feel like we will eventually go higher, but that's just a feeling. But as just said, we can also just go from here, then reject, then have that bullish peer 3 and then go much higher. So if I can now have the long, if I can get the short here into the long here, then we are nailing the market. Crazy art. But the most optimal reversal level for short, that is definitely this 72, 73k zone, where this is also, we came up, higher low, higher high, break. So this whole zone is range supply. Let me mark that out as range supply as well. So this is all range supply. And then do we have supply? Yeah, so here you also have like a last 30-minute buy candle before the aggressive sell-off. So this is also refined supply. So if interested in shorts, that is definitely alert the highest probability zone to look for rejections. Why can't I? Let's put it a bit on the right. Yes, right there. So yeah, that's pretty clean. Let's now look. Look, this is obviously doing the inverse, going lower, going there. Silver did actually what was the cleanest outcome, which I shared, which was creating a local distribution or flip of this local range. And the price did that over the weekend. At Friday, it closed there and then aggressive sell-off right here. And this is like a super clean Model 1 tree drive with a Model 2 in the third tap. Then a move down, a sweep, and now again breaking structure from left to right. So you basically from low up, high, higher low, higher high, break. So this is a super clean level to look for lower high for new shorts. Either you get your lower high here or already, or this model is invalidated. But this is like one of the best shorts you can get. So if we get a move into here, I'm super interested to short it if we get confirmations. So locally, we had like a sweep of here, but it's still looking pretty strong. So I would not be surprised to get a move into the refined supply and that bigger supply. But one thing, also thanks Kijos for checking that out, is that we have an unfinished candle, which makes it all a pretty interesting chart. Because as I just said, like either you form your lower high here and then continue the model down. There's no reason to go higher, but we have this weekly candle where you have no wick to the upside. Look, there's no wick. And on the weekly, if we check almost every can, okay, here, like next month, week it got cleared, but they almost all have wicks. And the daily, obviously it's Monday, so the daily high is also the weekly high, also no wick. So sooner or later, the market wants to clear that up. So there's a reason for price to come back, maybe give a very deep retrace to clear that. So also for silver, pretty interesting week ahead, how to trade it. Then gold is, yeah. Main idea last week was that model 2 distribution here. We did not get it. Instead, we mitigated demand right here. And right now we are around the mid-range. So it's an area I'm not super interested in trading until you get super clean triggers. But so far that's yeah, not really the case. And oil, yeah, made that huge move down. Then last week a little bit of up. It's just in the middle of nowhere. Not seeing anything super clear. So I'm just watching it currently mostly as an indication of like what is oil doing, which is the biggest insight into what the US and Iran war is doing. But yeah, maybe we have low, high, higher, low, higher, high, high, low, higher, high. So I can look what happens inside this range demand for potential higher low. But for now we opened with a strong push up and now are slowly going down. But yeah, I just saw a message that, what was it? Iran was thinking about a ceasefire or so. What was it? Here, Iranian officials are studying abandoning uranium enrichment. So yeah, if that's like the nuclear stuff, but I think it's just at this point all a show. Condition for ending the war. So yeah, obviously, if that happens, then market will full send and oil will dump very hard, and the crypto market will likely break out much higher. BTC showing a lot of strength. And then I want to talk about ETH, which is super interesting because first we talked about this range, similar as to BTC, where you have that naked low, that high, and then again, like a failed distribution, basically from the start. Let's show it on a fresh chart. Hype shot through the FIBs in supply. Okay. Quick view on hype. 4%. Yeah. Super strong. I'm still more interested in the longs if we got a trigger. Because we have this 3 drive. 1, 2, 3. Basically 4. Model 1 into Model 2. And technical target is still the range high. So local shorts can be the play here, but like the main objective is to reach the range high. So here we mitigated demand, but not really any accumulation. Right now pushing up pretty hard. So I think this will, yeah, I think that high could be next. Not interested in shorting it here. Yeah, let's see what happens if we sweep that high. Then you could potentially watch it from a new range, with this being your range. And then a short could be more interesting, where like a distribution right here, let's say we take the high, come back down, come back up, make like a model 1 here. That could be the second tap of this range high. So then a internal model 1 here, which is the sweep of the range high, that will give super clean shorts. But until then, I think we will travel towards that high. So let's see. Back to ETH. So first we had the same range as BTC basically, where you have range low, range high. Let's look at it from here. So tap 1, tap 1. Then this was step 2. Extend your range. And then what did we do here? Tap 3. So this is basically, again, a failed distribution, failed model 1, because here we break out of it. Then we can look how strong was the breakout. You can already see this is pretty, like, not really a deviation kind of move, but more an aggressive push out. And also if we look at the higher time frame, price closed out of the deviation threshold. Therefore, technically, this is a breakout, which makes it more likely that this is the range, breakout, retest, continuation. However, since it is a little bit more volatile and BTC still stayed within the range, I at first used this as the range and then this like just a super deep deviation. But now that we came back in the range and are pushing above our former range high, which is basically this level, and we are back above it, I don't see this is not a range to me anymore. So right now I see this as the new range, which is a bullish range because we pull the range from high to low. So then the main expectation is also to go to the highs. And ETH looks therefore not that bad. With some demand lower. Also like BTC locally, some supply with that weekend dump right there. But overall, this is slowly taking a lot of time and more and more looking like a potential move up. And before people, it has to sweep the low and stuff. No, to me it does not have to. So I think ETH looked actually pretty good. And especially since we have this local uptrend, high low. This swept it, I think. So this is structure right here. So here we have an imbalance with demand below. So maybe sweep that low into demand and imbalance, and then continue to the range high. And then also here, structure on ETH, like on BTC, it broke back to bearish right here, even on the 4 hour. But ETH, if we look at the 4 hour, then this is the structure. So here high, then here this, and this is internal, because these 3 candles are within that former high. So that does not count. So this is the official count, in which this is our 4-hour bullish structure. So not closing below here, but for example wicking it, can still be continuation of our internal bullish structure. So ETH does actually look pretty good, as do quite some alts. So just keeping that in mind, and I wanted to share why I now see it like this range and not like this anymore. BTC is pushing into the single range, but it is breaking out of the range. Like now you can already see with this move up, this is way too deep of a move out of your range. So then I delete the range, and I always put on like an internal boss. So this is now the eyeballs, which basically means that we had like move down, up, down, this broke back to bullish, and this is now our range demand. Because we have consolidation, bullish break internally. So then this is basically the fresh range demand, where you can look for pullbacks for continuation longs. So normally I draw it like this, but if I have it a horizontal from left to right, then you know that basically everything below that is a range demand. And then I like to just refine it towards this, for example, where this is now the range demand, and this is the demand inside that range demand. This liquidity got swept. Alert right here. They can do the same trick again, because this is our range demand. So from here till here. And this is the range demand POC. So the most optimal reversal. So yeah, that's most of it. I think super interesting trading week ahead with some super clean charts. Yeah, hype just super strong. Tao, yeah, we have to see, but so far it's not really interesting to me again. We deviated the local range highs, just front running that supply, and are now back. So technical target is basically the range low, and that's where I'm potentially interested in accumulations again to trade it higher. But for now it looks like volatility is pretty dead. So until that changes, I'm not interested in trading it. If you are a believer in the project, then for spot, these can be interesting levels potentially. But I don't give much advice on spot buying, because it's a decision for yourself as always. Let's see if, yeah, okay, so those single prints are up to 72,800. Oh, so the single print is basically all the way up into that supply, that refined supply. So let me put it here. I'm gonna need more coffee this week. Exactly, and less alcohol. Both are definitely true. Yeah, we have some good volatility. So, but often it can also be downfall that you think, oh, this week it's gonna be big week. But like just like last week, there was like a lot of clear things, but if you just wait, then eventually you get those super clean trades, and then you also need like just 1 day, wait for the high probability zone. For example, for shorts, it's here. So you can technically just put an alert there. Watch if you get your trigger, and then short it. For BTC, I want to check one little thing on the very low time frame, because it seems like we topped again with a local model. So this was the range high supply where price stepped into. And how did we top? Again with a low time frame tree drive. Do you see that? Like, it's crazy. Also last week, almost every high and low was actually a low time frame model. Like this one was super hard to trade because there was no structure in the move. Where is it? Let's see if there was structure confirmation. No, like, yeah, because it's so low time frame, you can already see like this model 2 is basically local topping pattern, and then you do not break any structure till basically here, which is already your range low. So that's a little bit unfortunate. But you can watch like how, like if you zoom out, and if you see these wicks, that's why the wicks, people call it Bojan candles, are also super powerful. Because if you see this, like wick, wick, sorry for the horrible drawing, but like exactly what we see here, they can already know, like on a low time frame, that's probably a model 2 or model 1 distribution. So that's why sometimes just be on the high time frame can already give an indication. And like here, this is model 2, model 2. But again, funny to see that the exact top was again a 30-second tree drive. Okay, are there any questions? I think just for the watch list that we have, plans are pretty clean. I don't care too much about the other alts as well. I think BTC alone will give plenty of opportunities this week. And yeah, obviously nice to start the week with a running long, around 6R currently already. But I obviously took most out at the technical target, but the rest is doing a nice job. Okay, last thing we can check are if the stats are telling us anything. On Monday, I don't usually look at the stats, but only on the weekly, if we have like warning signs. For example, a weekly wickless candle or very early. That's not the case. Let's see if it's for one of the other watchlist coins a warning. Hype and Soul have warnings. So that's interesting because then we can see what is the warning. Oh, what the fuck? I have to be on BTC. Okay, no warnings on BTC. On Hype, what is the warning? 100% of the P1s weekly low form after current P1. 100% of the P1s of the weekly low have a bigger wick. Okay, BTC is pushing nicely. I'm gonna take some more profits. So 1 minute. Okay, perfect. Some more profits, an alert here where I'm gonna take some more. Okay, but interesting, we have, where's my YouTube? We have 100% warning signs on both the time and distance on the weekly on high, on the weekly low. High. So let's look. The daily. Okay, so the weekly low. Oh. Okay, this is the weekly low. Yeah, okay, so that makes me a bit more interested already in a potential short, because we know that this is a big magnet to eventually take out. So alert at the range high will get a little bit more significance to look for rotation back to that weekly low. And what has Sol? Sol had no warnings. That was on the. Okay, so only hype, but not. Can be something for to look at later, but at least I want to see that the local high be taken out. And then I think, yeah, everything's pretty clean. And then we should have a good trading week ahead. So let's see if we can bring this a little higher there. But I'm already out for the most part with a good TP right here. So then I want to thank everyone for tuning in again. And we're just gonna do the same as every week, which is basically just waiting for the clean ranges and the models to appear, and then execute. So for now, I would take good profits on your shorts, on your longs, just because you are already good RR. For longs, locally we have fresh demand right here, where we can look for reactions. For shorts, this is the biggest zone to look for, filling the single prints into that supply. But for now, you have a pretty aggressive move up. So yeah, maybe if we get the 3 drive again on the lower time frames, we can just short it again lower. And then super interested in sweeping the current weekly lows for new for new longs into this demand. Or look for that bullish PO3 idea, which will be even crazier. But that are the local levels and the ones I'm looking at. So thanks everyone for tuning in, and let's stay in touch in the Discord, because we already saw how valuable it can be. So thanks for that, and cheers everyone.